Hi, everybody, and welcome to the another Platinum Mastermind call here live and direct from Las Vegas. And these calls we get involved in, and these are the calls I've been running now for quite a long time. And they're here really just to basically help you in terms of answer any challenges you have, and as a mastermind and collective, help you overcome any obstacles and challenges in doing what we do in terms of becoming a joint venture broker, joint venture consultant, or joint venture deal maker. So, as always, the way these calls work is stage one. We have an opportunity to state our challenges or our obstacles, which obviously I put up a post in the Facebook group, and that's your opportunity to state a challenge or a problem that you're having that you need help with. And then obviously I cover all those challenges here on these calls twice every 2 weeks basically. And if you have any challenges, you're always welcome to email them to me as well. Stage two, as a group, we qualify whether these are real challenges or not. And then obviously before we go on to a proposed solution, as a mastermind collective, we try and come up with a solution. And then stage three, I also give you my perspective on how to solve that particular challenge. So we've got a lot of challenges this week, which is really good. I'm very pleased with that. And the more challenges we have, the better it is. And the more I know that everyone's basically doing something, and there's an opportunity for all of us to help each other. Okay, so challenge number one comes from first of all, for Dr. Murray. Dr. Murray says, how can we find companies and individuals looking for funding? So I'm putting this question out to the group. What are ways that we can help Dr. Murray find people who are after venture capital, loans, funding, whether individuals or companies? Now, Bevan mentioned that if companies are recruiting and hiring, there can be an opportunity to approach them if they may need funding. That's another avenue to go down to have a look. Also, at the same time, I think doing a lot of research on the internet as well and having a look at what companies are growing. Um, and obviously forums are a good place as well. But has anyone got any more ideas for Dr. Murray before I sort of talk more about what I think is the best way to approach companies or individuals who are looking for funding? So if you've got any ideas for Dr. Murray, please do put it in the chat box, and we'll see how we can help him. And if not, then I'll just jump into and talk more about the solution that I think will be the best for that. Okay, so let's look at LinkedIn. I think LinkedIn. Okay, lost restored. It looks like I'm going in and out at the moment on my audio. But like I said, this is being recorded, so hopefully we'll be able to get it. Okay, so I think my personal take on this is on LinkedIn. Anyone that's involved in finance, I think anyone who's a financial controller or a financial director would be a person to approach. But the problem you're going to have is how are you going to know whether companies need funding or finance? That's where you're going to come. You're going to come a bit stuck. So what you need to really be doing is probably visiting groups on LinkedIn to find out what people are talking about in terms of what they need. Also, sharing what you can offer to people in a group would help. But in terms of companies and individuals looking for funding, that requires research. I think you've got to look at or target either a specific industry that you want to target or specific companies. But then you have to do some research to find out whether where they are in terms of growth, because that primarily is the problem you're going to come up against is you won't know, who needs funding and who doesn't need funding. But I guess if you do a bit more due diligence and research to find out what companies are doing, especially if you go to their actual websites, you may get an indication of whether they are preparing for funding or whether they require funding for growth. So I think those are predominantly are going to be the areas. So I hope that helps. I hope that helps because at that point it's a difficult one because it's very hard to go and target people in positions, to be honest with you. But anyway, good question. Okay, so next question is from Shane, and Shane says, um, once engaging a JV partner, what are the best things to have in place to make the agreement process as fast as possible? So I think what Shane's trying to say here is once you have a prospect who's a potential JV partner, what things need to be in place for the agreement to happen. So I think, again, this comes down to um, uh, providing the JV partner prospect with the information they need, and it's going to be financials, really, to be honest with you. And probably also make sure you provide them with a sample of the product or service. Those are things that need to be in place before the agreement processes as fast as possible. So the quickest you can get all the information over to the prospective JV partner, I think that would be the quickest way to get the agreement signed. But also, while you're having a conversation with them or while you're talking, it would be a good idea to actually send them a copy of the agreement anyway for them to have in hand, which will speed up the process to make them sign it quicker and make that process as fast as possible. So that's basically my take on that question there. Um, Next question again comes from Dr. Murray and says, who best to approach in companies for licensing deals? This would definitely be one or two people, either someone in marketing or probably business development. But I think marketing, anyone who is head of marketing, for example, you may find people in an organization who may be head of licensing. Some people may already be doing licensing, but it's got to be someone who is orientated towards marketing. So I think head of marketing would be the person to approach for a licensing deal. That would be the ideal person to approach for that. So I don't know if anyone else has got anything to add to that in terms of their experiences, or if anyone else has done any licensing deals here. But in terms of approaching, head of marketing basically would be the person to approach for that. And again, you've got to do your due diligence, guys. You've got to do some research on companies and existing companies to find out exactly what they're doing internally, okay? And try and get a hold of some marketing reports also, or even their annual reports, which will give you more data to be able to have that conversation and that approach. Right. Next question comes from Timothy. Timothy says, "How do you convince list side partners to a JV when your product side client has no social proof?" Now, when you say Timothy's actually you're on the call. Timothy, when you say no social proof, do you mean no sales, no testimonials? Which one of those two? Because social proof can be testimonials. Social proof doesn't necessarily have to be sales. So when you say no social proof, what do you mean? Do you mean sales or do you mean testimonials? Because if when you're working, at the end of the day, if you have a product side client, right, you have to work with companies that have sales. You're not going to work with a product side client that is a startup unless you want to. There's a possibility that they may have an amazing product and a patent that you can get into companies, but if you're working with a product side, okay, let's go with sales, then you wouldn't want to work with that product side client. Why would you work with a product side client that has no sales? Unless you were acting more in a business development role and they had a product that it's got to have done something. They must have tested this product in the market. they must have done something with the product, because you can't just work with a company that has a product that has no history whatsoever. I wouldn't recommend doing that at all. Yeah, don't do that, because they have to have something. They have to have either a Facebook group, Facebook fan page that has testimonials or reviews, or they should have a product, okay, that has some leverage, that has something that you can leverage when you're approaching list side partners. Now, list side partners at the end of the day, you're promoting to their customers, so they're going to want to see sales. So whenever you're doing a list side JV and you've got a product that you want to promote, it has to be sales based, because then it won't work, because the list side partner is really looking at making extra an additional revenue stream, right, from the JV. And not, what you don't want is, you don't want to present them with a product that has no history of sales or no conversion rates, because then you can't estimate exactly how much they're going to make. It's all in the numbers, and you need to be able to show them the numbers that, look, this is the potential of this JV and this is what we can do. Okay, it's all in the numbers. Testimonials work, but if they have testimonials, surely they've sold product, right? Or are they giving away product for testimonials? But in my opinion, if you're working with a product side client, they've got to have some sales, because you need an estimation of conversion rates, okay, to be able to go to a list side partner and say, okay, you've got a 10,000 list. Even if we sold 50, we've sold 50 of this product, and this is our, yes, fine. If they've got some sales, it's fine, as long as you can determine what their margins are and how much profit is in each product. Then you can apply that conversion rate to a list and say, okay, we sold, like, let's say 50 of these, and this is the sales figures, these are the margins. If we brought that to your list, and we did that with a tiny segment, we did a Facebook ad, it went out to 100 people, we sold 25, we made 25 sales. So now you've got your percentage in terms of visitors to sales or prospects to sales. Now you can use that estimation when you approach a list side partner and say, look, you've got 10,000 customers, this is the conversion rate. We convert every 1 in 3 or 1 in 2 or whatever, then they'll really be able to see the potential from the JV, right? It really helps. If you can show them numbers and they can see sense in those numbers when they're doing none of the work, that's what you really need to take to the table. That's what really, really works. It's all in the numbers. People want to see the numbers. Okay, so next question comes from Doug, and it is, as a JV broker, what is the best way to manage the timing in lining up a JV product partner to your main client list partner? So this requires basically a lot of research. Okay, so if you've got a main client that's a list partner, you're very lucky. You're in a very, very lucky position, because then all you've got to do is you've got to go out and you've got to contact potential product partners and say, look, I've got a client, we've got a list of 10,000 or whatever, or 5,000, and we would love to promote your products to our list. Now, the great thing with this is your client list. I mean, your client who's a list partner, he should be able to provide you with a list of prospective JV partners or products that he thinks will do really, really well with his customers. So it's pretty much a done deal. The information is there already for you. All you have to do now is go out and reach out to people. Now, if you're reaching out to people as the list partner broker, as the list broker, you're in a very favorable position, because a lot of people who own products want to sell more product. So you'll probably get a yes from everybody. Whereas if you have a product and you're going to list partners, it's a much harder deal, because you've got to convince the list partner to promote the product, right? So yeah, so that's basically the best way to manage that. And if you've got that, then it is you're in a great position, to be honest with you. Okay. Next question is from Doug. Is in selecting a niche market as a JV broker. Let's have a look. Let's go here. Does the B2B market have more income leverage than B2C? It just really depends, okay? Because one of the biggest JVs that I did was a B2C, right? It was the consumer list who bought the book, who then bought the DVD. But then I've made a lot of money from doing B2B as well, because B2B, the thing with B2B is it gives you more leverage in terms of when it comes to things like licensing and royalties. Okay, so there are two different avenues. What I would personally do is look at where your background is. Is it more B2B or B2C? And that's the way to do it. B2B is I think B2B is something that you can make money in B2B. It takes slightly longer than B2C. I think B2C is a quicker route to making the money, but then B2B is a slightly longer route. But the great thing with B2B is it's more or less guaranteed when you're working with companies. The B2C market is good, but it's very rare. Put it this way, B2C is very rare you find a couple of good deals. Most of the deals will be in the B2B market. Okay, that's where the regular deals that you'll find that you can do on a weekly basis will be in the B2B market. Okay, so next question from Doug also says, are there any markets where list JVs do not work, i.e. small list? Yeah, definitely. List JVs only work if you're working with companies that have a minimum of 5,000. I would say 5,000 list. And I'm talking customers here, 5,000 customers. So if anyone has below 5,000 customers, then a list JV won't really work. Industry-wise, it doesn't matter. If someone has 5,000 customers or 10,000 customers or 10,000 or more customers, they're still a good company to work with on the list side JV. If they have recurring business from existing customers, that works really well also. Then you've got to look at margin-wise. Are you looking at a list that people buy a $1 product or a $5 product or a $20 product or a $100 product? For you to make good money, minimum I'd say $25 to $50 profit per product. So the average sale has got to be anywhere between $50 to $100, right? So that's what I would look at on working with list JV partners. And the last question from Doug is, in which markets do list JVs work best? So I think I just answered that question in terms of, with list JVs, those would be the best sort of markets that I would look at in terms of working with. Okay, so great questions for this week's Mastermind call. Thank you very much, everyone, for sending in those questions. I really appreciate that. And what I want to do right now, I've got Dr. Murray, who wants to do a short a presentation on a JV project that he'd like to offer and open up to the group. So I think we've got another 25-30 minutes of the call left. So what I'm going to do is I'm going to bring on Dr. Murray, and I'll get him to just do a short presentation on an offer that he wants to offer out to the group, a potential JV offer. So let's do that now. Murray.
Hello.
How are you, buddy? Me? Yeah, I'm good. How are you?
Beautiful. Excellent. Thanks for this opportunity.
No problem. Good. What I'll do now is I'll just pass on the controls to you, and then I'll let you fire away. So if you give me 1 second. Right. Okay. So I'll pass on the controls. So you should have now. If you click the link.
Show my screen.
Yeah. Cool. And then I'll let you take it away from there.
Can you see my screen?
Yep. Got it. Brilliant. Okay.
Okay. Awesome. Hey. So thanks. I'd like to thank Sohail for this chance to show this. Hope everybody can hang in there for about 10 minutes. With this pretty cool opportunity I have here. My name is Murray Bollier. I've been with Sohail for a couple of years. Been a pleasure working with him, and if you're on this call, you're lucky to be in the group. That's all I can say. So this opportunity I wanted to share, but because there's a real timeliness to it. There's a loophole in time here caused by the Trump tax laws, and I wanted to share this with you because this is a historic event it's going to go away after this year. So there's a time element involved. In case you don't know, I have a background of 35 years in Fortune 500 semiconductor manufacturing and finance, and I've been doing consulting here for the last 6 months to a year in this arena. So let's just get started here. So what we do, my company's name is Boosted Profits, and the background is that the government. By the way, this relates to U.S. companies only. So. Sorry, it's just U.S. So the U.S. government has passed over $100 billion in tax incentives over the last several years, but 90% of people, 90% of the companies are not getting the benefits that they qualify for. So what I do is I help small and medium-sized businesses get the money they deserve from these tax incentives that are available. Large corporations don't need my help because they have staffs of accountants that handle this kind of stuff, but small and medium-sized do not. Why don't they already do this? Because they don't have the knowledge of this, they don't have the bandwidth or the skills. It's kind of like if you go to a doctor, you get to go to your general doctor to get a physical every year, and or if you have a sore throat. But if you have a heart attack, you go to a specialist. So we don't replace accountants at small companies, but we augment them and give them specialized help in these areas. So what we do is we identify potential tax savings and other cost savings to owners of these small, medium-sized businesses in less than 15 minutes using a proprietary app that we have. It's very cool. You just got to get in front of them, ask them a few questions, and in 15 minutes, we can give them an estimate of what we think we can save them. And this is the key. We only get paid if we actually deliver them savings. So there's no upfront money. And if we do generate some savings based on our analysis, then we only charge them a small percentage of the savings that we actually derived. So this is like a no-risk, no-brainer, in my opinion. We do all the work and take all the risk. So to me, this is just, I'm excited to be in this work. All right, so let's hope I can go to the next screen. All right, what are the best industries that qualify for savings? You need to make a note of this. If you know anybody in these industries, then maybe we can work something out where you can put me in front of the owners of these kind of companies. It turns out that auto dealerships and manufacturing and commercial real estate and hotels, the nature of those businesses are such that they qualify for the most potential tax credits and tax incentives that are available today. So make a mental note of that. A recording of this will be in the group if you aren't taking notes, but these are your hot spots for us. But it also construction, architecture, engineering, medical facilities. We have right where I live here, we have these walk-in 24-hour facilities. Those are great. Any medical facility, staffing agencies are huge. Professional services like doctors, dentists, restaurants are good. Software companies, funeral homes. You can see there's quite a diversification here. Basically, any business that has a building asset greater than $1 million, which includes renovations, or hires employees, may be a candidate. And when in doubt, put me in front of them, and then my app can determine in 15 minutes whether they qualify or not. So that way there's no question. All right. So when in doubt, get me in front of them. All right. Now you could, if you can get me in front of any of these, prospects, great. But there's a better way to do it, is to leverage people who already have relationships with those industries. All right. So let me open your mind up here, and we want to. In order to work with those industries, you get far better results if you go through an intermediary who already has a business relationship with them, who's already known, liked, and trusted by somebody else. And to give you an idea, I'm talking about associations. Sohail talked about associations recently somewhere. I can't remember on all the calls I've been on, but that's a huge, like a hotel association or a dentist association. If I can get in front of somebody like that, I can say, I can explain how this could help the whole group. Construction companies are huge because buildings is one of the beneficiaries of this tax incentives, and construction companies are the ones who are out there building, renovations and building new property. So if you can get in with a construction company, they can open up their Rolodex and you're good to go. Anybody who is a business consultant is a huge potential partner, because that's what they do, is they show businesses how to make more money. We can latch on to a business consultant and say, hey, why don't we add this service that of how to save money in taxes to what you're already doing. We can leverage what they're already doing. It's friggin' win-win. Business brokers, same kind of deal. They're selling and buying businesses. We can make the business transaction much more profitable if we can show them how the seller or purchaser is going to save money in taxes. CRE brokers and realtors, big property, business property, not residential. Residential, no. But if it's a business property, you can save money on taxes, all right? And working with somebody who's in the business of selling and buying commercial property, huge leverage. Insurance agents, financial planners, and accountants, those industries are all getting commoditized. And so we can show them how they can augment what they're already doing. And I know it's a hard nut to crack, and it's not something they want to open up their their client list and just hand it. If you're on this call watching this, if you have any people that you know that are in these fields and are may be interested in a strategic partnership, have them talk to me, and we can work something out where you're gonna get some credit. Now, there's here's a quick example of a commercial real estate. CRE stands for commercial real estate property owner. Okay, an owner of a property. And I just did one of these for a guy in town. Let's assume a building for a particular business cost the guy $4 million, totally reasonable, and that includes renovations. And let's say his property tax bill every year is 100 grand. That's totally reasonable. With our analysis, we can estimate we can save this guy a one-time saving of 240 to 300K. So this is not trivial. Imagine if we could tell this guy, you own a building. By the way, if we could do this analysis, which we do all the work and we don't charge anything until we actually save you something, we can generate a cost one-time cash flow of 240 to 300K. That's very appealing. That's something that I would jump on if I was the commercial real estate owner. It depends. There's a lot of variables. It depends on a lot of factors, but I can't give an exact number, but it's somewhere in that range. And they also would get, based on our history, we can mitigate their property tax by an average of 20%. So I'm gonna be conservative and say I think we could probably save them 15 grand on property tax as well, and that's a recurring every year. I mean, that's big. So that's this is a win-win for the client, and for you and I, who are going to get a commission based on showing them how they can save money at no risk to them. It's a beautiful business model. Now, let's talk about the leveraged relationship we have with the commercial real estate. I'm going pretty fast here because I don't want to get too accounting on you, but let's talk about the leverage we can get if we develop a relationship with somebody who is in the business of selling commercial real estate to other folks. So how does this help brokers and realtors in the commercial real estate? And remember, this is just one of the areas on that fourth slide. This is a huge potential of added value to their clients. It's a significant differentiator from other brokers. It opens more doors for them. Most commercial real estate realtors and brokers that I know are constantly being squeezed on commissions, just like a residential broker is being squeezed. Buyers and sellers don't want to pay big commissions, so they're constantly squeezing the broker, and commissions are a big deal. That's how they make their money, and so they don't like to be squeezed. So they can leverage their clients. Here's three different dimensions of how they can leverage their clients. Number one, past clients. They can stay relevant to past clients and get more business if they can demonstrate. You can go back to a past client that you sold a property to 5 years ago and say, hey, by the way, have you considered doing this tax program? And if not, let me hook you up with Murray. Number two, this is a really big one, is current clients get a big jump on competitors if they're talking to somebody currently in the market by offering him a massive cash back, like on the example I just gave you, 240K on a sale, and that would eliminate the discussion of reducing commissions right off the bat. That would be a lot bigger benefit to the purchaser than trying to squeeze like 1 or 2% out of the commission. So that's a huge differentiator for the broker. I hope that makes sense. All right. And then future clients. I've seen studies, and it's estimated that 18 million businesses are projected to be sold, handed down, or closed in the next 8 to 10 years. That's a lot of properties. So what you want to do as a commercial real estate broker and realtor is to get in front of that and establish relationships before all that happens. And then as you are wheeling and dealing properties, we can bring in the tax equation as well, and it's a win-win. It's like gravy. So hopefully that makes sense. It's how we can benefit the actual client, and then how we can establish relationships with people who already have the relationships with our clients. Now, all that's cool, and this is constantly going on. And people always ask me, what did the Trump tax change law affect your business? The answer is it made everything we do stronger. Plus it created a loophole, if you will, in a very short window of time that we need to jump on, and I'm going to show that to you right now. And this is going to go away if you don't take advantage of it right now. And that's why I wanted to get on this call, because this, I kind of just learned about this in the last couple of weeks. This is the best time in history to share the program I've just described for one reason. This was created by it's called the TCJA, Tax Cut and Job Act. So here's some background on why this is a important window. The corporate tax rate, and this is, bear with me on this account. I'm trying to keep the accountant stuff at a minimum, but I think you'll get it. The corporate tax rate last year for activity in 2017 was 35%. The rate that's going to take effect this year is 21%. And just that alone is going to be good for corporate business, okay? But the changing of the rate from year to year creates a situation that is very favorable to us. And I'll explain here in a minute. And one of the several different tools we have in our arsenal of tax savings is this thing called cost segregation. This is completely legal and approved and recommended actually by the IRS. So this is not some voodoo. This is actual legitimate stuff. Cost segregation is a fancy word. It's based on the value of the property, including renovations. Typically, when you buy a business which has a building, or when you buy a property and you own the property, you write off the property over 39 years. So if you buy a property for 39 million, you can write off $1 million a year. What that means when I say write it off is when you file your taxes, you have income and then you have expenses, you can take 1/39th of the cost of the building every year. The reality is, though, that people rarely live 39 years or rarely own a business 39 years, or the building rarely lasts 39 years and something else happens. So you never get to take advantage of writing off the whole building. And if you do, it takes 39 years. That's a long time. And here I just explained that. Most companies write off 1/39th of the value every year. What cost segregation does, a fancy word, it identifies this is a tax law that was put in place, years ago, that not everybody does or is aware of or has the bandwidth to implement. Cost segregation identifies the components of a property that are eligible for accelerated depreciation. So what that means is you get a large one-time immediate cash flow. So in English, that means you buy a building, instead of writing off the million, in the example I gave, let's say the example I gave, $4 million building. It's not just a building, it's also heating, plumbing, wiring, air conditioning, light, offices, furniture, blah, 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 blah. All those things do not last 39 years. They last a lot less, and so therefore you can write them off a lot quicker, meaning you can take a big one-time deduction when you file your income taxes, really big deduction. And the idea is that $1 now is worth a lot more than $1 in 39 years. So if you have that money in your pocket now, you can go out and do more business, you can invest it in something, you can invest in your retirement, whatever, but it's a huge cash flow, and hopefully you can understand what I'm talking about when I say that. So that's what we do when we do this. This is one of the many tools in our arsenal. It's called cost segregation, and it's very important that we for this window in time, and I'll explain why in the next slide. So if we implement cost segregation, which hopefully you understood all that, using a tax rate of 2017, which is 35%, there's a 40% higher cash flow than if we wait and use the 2018 tax rate of 21%. Now let that sink in. If we wait and don't implement this, we're going to lose out forever on this 40%. This is an opportunity cost that's going away. Right now, businesses are currently preparing taxes based on 2017 activity, right? I mean, everyone's doing their taxes. So in order to capitalize on this loophole and tax rate changes, Cost segregation must be implemented in the 2017 tax computation. If you don't understand what I'm saying there, maybe Sohail can tell me if there's any questions. Can I see the things? I don't see any questions. So anyway, feel free to ask me a question if you don't understand this. But you've got to comprehend cost segregation when you're doing your 2017 taxes. So waiting until 2018 and then implementing cost segregation, you're going to lose this 40% opportunity. You're just going to be flushing money away. So it's important. Oh, here's some more facts. The property and renovations that qualify must be on the books by the end of last year. So it's too late if they're going to do any renovations this year. We're talking about activity that took place in 2017 or earlier. It doesn't matter if you did it earlier. It doesn't have to be property you bought in 2017. You just have to have it on the books. It could have been purchased 10 years ago. I just did a guy who owns a medical facility that bought this stuff. He bought the property 8 years ago, and we're going to get him 100 grand. It's not a real big property. We're going to get him 100 grand. It doesn't have to be bought in 2017. It just has to be in the books by 2017. Anytime a property changes hands, the clock is reset to allow for another cost segregation study. So when a new guy purchases a business, that's a new asset on his books. Now he can go ahead and do the cost segregation study all again, even makes sense. Once this window is passed, the opportunity is gone. This is like free money. And so the answer is get me in front of as many prospects as possible. And I shared with you the ideas in the previous slides of who the best industries were, and even better, who the best people who already had relationships with those industries would be. Just to give you some ideas, I want to put your antenna up if you come across anybody in those industries. So what happens is I get a small commission on this, and we'll work something out with you guys to make sure that everyone is compensated. This is a win-win. The commissions are not trivial, and the cool thing is it's not just making money, it's really helping businesses out, making sure they're aware of what they're rightfully deserve to get that they might not know about or have the bandwidth to do. So that's why I like doing this. It's really helping people out. All right, so if you're interested in working with me, here. All right, so that's it from me. Thanks to Sohail. I'm going to, somehow I got to pass this back to you.
Before you do that, Murray.
Sohail, how do I do?
Before you do that, I just got two questions for you. The first question is the tax rate changing back to 35% in 2019?
No, it's permanent. Well, unless Congress passes the law, it's 21% going forward, and that's permanent.
Okay, and the other question is, what does the commission opportunity look like?
Minimum high four figures. Now that would be split with whoever we're probably going to want to throw a bone if we for example if whoever's on this phone call has a relationship, let's say, with a commercial real estate realtor, we'd probably want to split any results between that person, whoever has the idea and the connection here in the group, and myself. So I would be willing to split it 3 ways, But so to answer the question, the commissions are, depending on the size of the industry, starting at the mid to high 4 figures, and easily, like the example I gave in that $4 million building, the commission would have been somewhere between 5 and 8 grand. All right, okay. for that building. There's some variables, but just to give you an idea, we're not talking peanuts. So
brilliant. That makes sense. And last question, what's the turnaround time to payment?
Very good question. It depends on the urgency. So here's the sequence of events. Great question. So you get me in front of somebody. I show them by the way, I didn't stress this on the presentation, but we want the business owner to have his accountant sitting next to them when we do this. We don't want them to feel like we're pulling the wool over their eyes with any kind of magic or something. So the day we show them the presentation that says, you know, I ask them 10 questions, I can show them what we can do. If they say yes, they have to sign a document, which should be done right on the spot, that says, if we show you we can save money, you will pay us, right? And they say yes to sign the document. That triggers us to do the work. If they sign that right away, then we're going to ask them for some documents. We got to do some studies, and the turnaround time to do the studies varies. You know, it can be as fast as 1 to 2 weeks, up to 2 to 3 months. I would say the range of getting paid is between 2 weeks and 3 months, roughly. You know, depending on the responsiveness of the client.
Okay.
That makes sense?
Brilliant. Okay.
If the accountant responds really quickly with everything and everyone's on board, we can do it in 2 weeks.
Cool. Okay, Murray, thank you for that. A great presentation, by the way. I really enjoyed that.
Thanks for the opportunity. Yeah, good. Thank you. And I hope everybody's radar is up now. Now you know it's possible. So in your travels, if you come across somebody, you know where I can be reached.
Cool. And I'll get the recording up into the group ASAP also. Thank you.
Thank you.
Okay, brilliant. Okay, good stuff. All right, so let's just go back then to finish off. We've got another 5 minutes left. So guys, if you've got any more questions for me or for Murray, we've got another 5 minutes left. So if you want to put any questions into the chat box, please put them into the chat box right now. Otherwise, we'll wrap up this call and I will get the recording sorted out and put up into the group ASAP. So let me know if you've got any questions, please put them in the chat box. If not, then we will wrap the call up. Right. Okay, cool. I think we're done there. Brilliant. Thank you very much then to Murray for that. That was a very cool presentation, actually. So I'll make sure that goes up into the group. And if people have any more questions, then they can reach out to you directly there. So that would be good. Brilliant. Okay, right. And like always, guys, if any of you have opportunities that you want to present to the group, you're always welcome to do that. Because don't forget, these mastermind calls are recorded. Okay, so the recording will go up into the group, and people will have an opportunity to have a look at that at the same time. All right, guys. So thanks very much for attending today's mastermind call. Wherever you guys are in the world, have a great evening, afternoon, morning, and I will speak to you guys very soon. Take care. Bye bye.